All right, so the May stats are in for the Fraser Valley. I'm going to be breaking down everything today. What happened in the month of May? I heard that in Toronto, the sales that they had this year in May were lower than May of 1996 during the recession, when there was 35% less people living in Toronto. And apparently we're not in a recession right now, so go figure. But here we are today, looking at the HPI. It took another leg down, roughly $9,000 in the month of May, continuing its downtrend. Median prices somehow jumped up. And if we go and we look at the inventory, 9,165 homes on the market. We've only had more homes in 2012, 2010, and 2008. So not all-time highs, but getting very close. Now, the amount of sales did actually tick up for the month of May, a good amount, probably like 12%, something like that, up about 12% month over month. But again, that is probably the peak of the spring market. I would be very surprised if June saw more sales than May. And we go look at the sales ratio, still absolutely terrible at 12%, which is well, you're right on the cusp of balanced and buyers. So it's not the worst thing ever, but it's not good at all. Detached for the Fraser Valley, again, taking another leg down, roughly $25,000 on the HPI. And that's a pretty big drop for the HPI. Let's see what the median price is doing. So the median price dropped 47 plus 18, $65,000. Sales to actives for detached actually went up a little bit from 8% to 10%. So slightly more inventory getting absorbed in the month of May. Sales, again, taking a pretty big leg up for May. Total inventory for detached, again, I talk about this every week, is still not that high, right? Like, it's higher than what it's been in the last couple of years. But I mean, if you go back through history and you look at this chart, it's really not that high. And this is why I still like detached homes as a buy right now. Every year, less of them are available, more people living here. And that's why the cost of land continues to go up, aside from the last couple of years, obviously. Now, apartments going down $5,000 on the HPI, trading pretty much flat on median. However, look at the inventory. It was actually flat in May. Pretty much, well, 6 less homes on the market in May for apartments in the Fraser Valley. Sales also rolled over, so that means new listings must have rolled over, right? So you have new listings rolling over, probably peaking out for the year. You have sales rolling over, have already peaked for the year, maybe. And a result of that is a little tiny bit less inventory on the market. Now, what's the sales ratio? The sales ratio is 13.2%, and it's pretty much been flat right around this mark through the entire spring market. Now, townhomes, price pretty much flat. Inventory, all-time highs. Sales, decent tick up. New listings also continuing to go up. And the sales to actives at 17%. So again, still townhomes holding up better than everything else at the moment. Now on to Abbotsford. Prices tick down on the HPI, $3,000. Inventory, nowhere close to the all-time high. Higher than recently, but not close to all-time highs. Sales took a massive jump up. Abbotsford had an interesting May. Look at the jump in sales in May. Went from 133 to 195 sales, with the sales to actives jumping from 11 to 15. We hop into detached. Detached went down about $14,000 on the HPI. Inventory, again, took a slight climb up, but you look at, the detached inventory historically, really not that bad. Sales in detached took a pretty big jump up as well, from 57 to 83 home sales. And then the sales to actives went from 10 to 14%. Now let's get into apartments in Abbotsford. HPI slid down another $5,000. Inventory getting pretty close to all-time highs there. Sales with a very small jump up, only an additional 7 condos sold. However, I did just pick up a 2022 unit in Abbotsford, AC, almost 900 square feet, backing onto the Greenbelt. Unit was immaculate. Looked like it had never been lived in before, in one of the best buildings in Abbotsford, for $488,500. And that was a good deal. That was a very good deal. for what's currently on the market there. I mean, there's like a whole bunch of units built in the late 2000s, kind of around that 480-ish to 490,000 there. So very good valuation on that condo. Now, sales to actives, 12 to 14% in the month of May. And then we get into the townhomes. Townhomes pretty much traded flat. Inventory has just been rocketing since December. Now at pretty much all-time highs. Pretty much right in line with the old record from 2019. We look at sales. Sales did jump quite a bit though. 32, basically doubled in the month of May for townhomes in Abbotsford. Sales to actives went from 12 to 24. Now in a seller's market, apparently, for the month of May. On to Langley. Down about $7,000 on the HPI. Inventory at all-time highs now in Langley. Sales didn't perform as well as Abbotsford. Abbotsford beat Langley this month, which is a surprise because Langley's been beating everything for a very long time. And finally this month, Abbotsford is gonna beat Langley as Langley did not surpass the March peak for sales. Sales to actives in Langley now sitting at 15%, which I think Abbotsford was 12 or 13. So the sales to actives is still a little bit better in Langley, if my memory is correct. Getting into detached, you saw prices go down about 18,000 on the HPI. Inventory seems to be a little bit higher for Langley detached than it is in, say, an Abbotsford, but they are building quite a bit of newer single-family homes in Langley. Like there's whole subdivisions of, row homes that exist in Langley that aren't really a thing in, Abbotsford. I mean, there's a couple neighborhoods here and there in Abbotsford, but Langley, has a lot more of them, right? Sales, slight uptick from 85 to 99, and then the sales to actives just raised ever so slightly in the detached market from 11 to 12. Now, apartments in Langley going down about $6,000 on the HPI. Inventory did not, well, I guess it did slightly surpass the peak of April 2025, but looks like it is about to roll over. This might be the peak for inventory. This might be it because inventory typically rolls over and, goes down for the rest of the year before going back up next spring. So, I mean, there is a chance this could be the peak for inventory, but that is yet to be seen. Sales in the apartment market went from 76 to 87, but again, did not surpass the highs of March 2025. And then sales to actives at 18%, which isn't all that bad. That's a balanced market, but you're getting close to seller's market territory there at 18% for apartments in Langley. Now, townhomes up ever so slightly, $2,000. Langley townhomes at all-time highs for inventory, yet I'm not seeing a lot of price decreases yet. Sales, again, not surpassing the April peak, right? So Langley sales pretty much rolled over across the board for Langley because it seems like they had a better March, April than everywhere else, and looks like the spring market may be coming to an end for Langley. Sales to actives, though, still 21%. Right? So still performing really, really well, despite the fact that they're at all-time highs of inventory. And now we're going to get into City of Surrey combined, which is usually the worst performing of all of these areas. And as you can see, this chart is just consistently deflating to the downside, continuing that trend in May, down about $7,000 on the HPI. Inventory high, but not all-time highs, kind of matching a lot of these similar peaks from the early 2010s. Sales went up ever so slightly, maybe 23 sales in the month of May. Sales to actives in City of Surrey combined is only 11%. So that would be the worst performing of the areas that I've covered so far. Now, getting into detached, we saw prices tick down on the HPI about $19,000. Inventory, again, like everything else, went up for the month of May. But again, you look at the detached market and there's not as much inventory now as there has been in the past. And there's probably, one of the reasons that I'm assuming is the reason why this happens is because we probably had a lot more detached homes in existence 10, 15 years ago. And we've been knocking them down every year and replacing them with condos and townhomes. So there's just less overall detached supply. And maybe that's why inventory in the detached market isn't as high as other areas, right? Sales for detached went up a little bit in May, and then you have the sales to actives at 8%. So it's very difficult to try and sell your detached home in Surrey right now. On to apartments. Prices went down $5,000 on the HPI. Inventory is at all-time highs, but did roll over and could be the peak of inventory for this year in the Surrey apartment market. Sales, however, rolled over as well, going from 184 to 160. And the sales to actives is at 11%. It's very difficult. It's pretty much difficult to sell anything in Surrey. But I could be proven wrong with the townhome market, which seems to be pretty resilient these days. Townhomes, again, down $2,000. Townhome inventory, all-time highs for City of Surrey combined. Sales, again, didn't really surpass its peak of March 2025, so it looks like that could be the peak for the year. And then the sales to actives is only 14%. So by far, townhomes in Surrey is the worst performing townhome market in the Fraser Valley by the numbers. All right, now we're getting into Whalley, one of my favorite areas to cover as of right now because it gets a lot of views. And if you look at the chart, it is just, again, continuing to deflate to down and to the right? Again, another 5%, another $5,000 off on the HPI for May. Inventory in Whalley, again, well, it rolled over for, the month of May, but still all-time highs. Aside from this one random peak over here in 2005, sales rolled over. Sales to actives is at 8% for any product type in Whalley. And we're going to see what happens when we get into the apartments. Detached in Whalley, going down along with everything else. Inventory for detached also peaked. Sales for detached in Whalley. And most of this, there's only 2 sales. This is like no data whatsoever because most of this is development property these days now, right? I mean, if there's going to be 2 sales, why am I even looking at this? Apartments. HPI ticked down $4,000. Inventory rolling over for apartments. Sales rolling over for apartments. And sales to actives ticked down from 10% to 9%. So by the numbers, selling pretty much anything in Whalley is going to be difficult. Now, I saw, I think I explained this in my last video, but I have a client, I've been working with them since January, first-time buyer, and we've been looking in Surrey Central because the prices have come down so much. 2 months ago when we started looking, there was a unit on the 7th or 8th floor of this building, and it sold for $380,000. And then basically a month or 2 later, the same floor plan, a floor below, sold for $350,000. The 381 had a bit of work done. It had like paint and floor, but it didn't have $30,000 worth of work done. And now there's another unit, same floor plan, 8 floors higher. And typically, as you go higher, the more expensive it gets. And this is listed for $349,000. Now it needs new cabinets, paint, flooring, everything else. But again, you're already $30,000 below the last comparable sale and you're 8 floors higher. Maybe you got to do $10,000, $12,000 worth of work to that unit. But if all things were the same, this unit should be worth more than $380,000 because it's several floors higher than that last sale. So just to show you what's happening right now with the prices, I mean, like you look at the HPI says $4,000. I can tell you condos in Surrey Central are definitely down more than $4,000. It's just the HPI is a lagging indicator, and that's probably why you're going to continue to see this slide over the next couple months. But hey, there are deals out there. Yes, the prices are going down. Yes, they're going to continue to go down. However, you can insulate yourself from that downside. If the market's going to fall another 10%, maybe you buy something 10% less than what it's worth. Well, that'd be pretty hard to do depending on the circumstances, but you can probably get 5% off the asking price on a lot of units on the market right now. I would safely and conservatively say that's pretty easy to do at the moment, right? So, you get in there, you see a unit that you like, good quality, good floor plan, good location, good exposure, good everything. You go in there and you negotiate a discount off the asking price to insulate yourself from that further downward price action at the moment. And it's pretty easy to do right now with all of the inventory that is on the market. And if you're interested in exploring that, you can book a call with me using the link below. Otherwise, just appreciate you for being here. I'm that Agent Kelly. I'm making moves to move you. Peace.